All right, insurance, your own, death, disability, critical illness, and other BS, insurance. Let's do some math, all right? But first, some stats. A 10-year-old Manulife study, and it doesn't matter that it's 10 years old. The numbers won't have changed at all, even in the middle of a pandemic. 87% of Canadians have no critical illness insurance. Some of you right now are saying, what's critical illness insurance? You've never even heard of it. 43% have no life insurance, which really it's death insurance, but 43% have no life insurance. 4 out of 10 of you have no life insurance. 79% of Canadians have no disability. Now, when you look at that, twice as many people with no disability coverage as death coverage is ridiculous because statistically speaking, you're 8 times more likely to be disabled than dead. And that's a good news story. That's a good news story. Whatever health situation hits you, whatever life impact, accident situation hits you, you're probably gonna survive. Maybe not entirely intact, maybe not entirely able to do what you were doing before, but you're gonna be okay. In other words, most of us get to that finish line at 70-something, 80-something, 90-something, you know, ladies, 100 and something. Most of us get to that finish line, but we got a bit of a limp, you know, and maybe we're missing an eyeball. Like, stuff's happened. You know, we've been hit a couple of times, but we got back up. So that's the good news. But these stats should not apply whatsoever to this audience. They just shouldn't. We know better. We see firsthand the impact of not having disability coverage, foreclosure. We see the impact of not having proper life insurance. And it's not necessarily foreclosure. It's not necessarily the house being lost. What it most often is the widow, and it normally is a widower, but every now and then it's a widower, pardon me, but it normally is a widow, statistically speaking. Sorry, dudes, you know, we're the ones that tend to check out early. What we see in our business are widows coming back to take equity out of the house to survive, to live. So even though the house may have been paid off, that's not enough. That's table stakes. That's the basic entry. So let's get into this. These folks are failing. Those folks are failing at real life, all right? Like, shit happens, right? I can think of a few people in my life. One of them we had a great interview with. He got through the shit that happened to him. Another one, the other two, actually all 3 names on this list, they've all gotten through the shit that happened to them. But it's been a bit of a wake-up call. And luckily, the 2 that I know quite well were very well prepared and were prepared when they went into that. They were leading by example, right, within the business. And we are held to a higher standard, right? We're held to a higher standard. So hold yourself to that higher standard. Lead by example, right? I have $5.6 million worth of life insurance. Now, we might need to edit that out because I don't know if I want my kids to know that, although I guess one of them's here, so he's heard that now. But yeah, like that's a lot of life insurance. But there's a reason for it, and we're gonna get to it. We're gonna do some math. Lead by example though, right? Have your own house in order. Have your own house in order. How are you supposed to ask other people to do something you haven't done yourself? I mean, it just doesn't make any sense to me at all. So here's a task for you. Go to the MPP site. Generate an application for yourself. You can actually apply for MPP disability. That's what I'm going to recommend. Not so much the life. We'll talk about life separately. But you should generate an MPP app, in particular, because that's the product that the majority of you have access to and are offering to your clients. So generate that app. Put in the lender you need to put in the gross mortgage amount, your balance or your gross HELOC limit, and go through the process yourself. Have the nurse come, draw the blood, you pee in the cup, it's not that big a deal. Go through the process so that you can speak to it professionally. You have to actually have done the thing that you're asking these people to do in order to actually talk about it. The bonus is you come out the other side with some disability coverage for yourself, which, by the way, is the least expensive disability coverage you can get in the country, and on top of that, it doesn't disrupt any standalone disability policies you would have, because you're only allowed to go to a certain amount, because it's actually looked at as insuring the mortgage, not you. So every broker in the country should have MPP disability, because every broker in the country is BFS. You're self-employed. You don't have any coverage from work. So why wouldn't you have the MPP disability? And by the way, if you own multiple doors, you generate the policy on every property. That's what I did. That's what I did. So I am leading by example in that regard. So like I say, disability, 8 times more likely than death. Be careful, right? And it's very hard for BFS applicants to replace their income, which that's you, by the way, your business for self, right? So the value is huge in this product. It's huge. And when you wrap your head around it and you kind of have that aha moment, you want to have this coverage in place. And again, critical illness. How people don't have this, I don't know. So one of the names on that list was an individual who didn't make it out the other side many, many years ago. Great guy. But he had a critical illness policy. And that made his last couple of months much, much better. Because as he slipped into a position of being totally unable to work, totally unable to care for his family, to do anything for them, on that 30th day, that critical illness policy paid out $200,000. You know, that one he'd been throwing 60 or 70 bucks a month into for a number of years. And, you know, a couple times he thought, maybe I should just cancel this. You know, why do we even have this? But he kept it going. And unfortunately, it paid out. But it bridged the gap to the end. It made it so much more comfortable, right? His wife was able to take a leave from work, didn't need to worry about paying the bills. She was able to take a few months after to compose herself, to get her own shit back together again. It gave her a cushion. And these are a return of premium product. You're just loaning them a little bit of money in case something happens. You get all the money back. So how this is a product that no one actually has, I don't know. I think the insurance industry just sucks at actually marketing it, at actually conveying the message. Like, it's free. Like, you pay, and then they give you all your premium money back. It's kind of a no-brainer when you think about it. Like, why wouldn't you have a couple $100,000 critical illness policy? It just makes sense. Again, lead by example, right? Death, don't do that, don't die. We don't want to set an example like that. But call it what it is, right? It's death insurance, and you should have a lot more of it than you have. A lot more. Do the math, all right? Your gross income is what? Well, we know that the median gross income of this audience last year was $200,000. We know that. I got the survey results. So your gross income was $200,000 last year. And what's the average age? I don't know, let's call it 40. So let's suggest you're going to broker for another 25 years. That is $5 million. So if you exit tomorrow and you're gone, that $5 million is gone. And if you're in a relationship where your partner is not working, maybe they're caring for the kids, maybe they're caring for elderly parents, maybe they're doing whatever else they're doing, or maybe they are working, but they're working at a job that pays $62,500, $82,500, heck, $112,500, whatever it is. Either way, your absence and the absence of that 200 grand a year for the next 25 years is going to be a factor, without a doubt. You're special. You're not like everyone else out there. Your income potential is higher than 99% of the rest of the country. So get your shit together. Understand the responsibility you have that comes along with that. You're going to be able to provide a certain standard of living as long as you're here. And, you know, I like to live in the lifestyle that I've grown accustomed to, right? We all do. None of us wants to go backwards. So why would you want your family to go backwards? right? Think about it. Right now, you're on a path where your children can go to any school they're going to want to go to, where your parents could be put into any care home they need to be put into. You're going to be able to do things for your family that you would never have been able to do had you not tripped over this amazing career called brokering. But if you're gone, all of that goes with you. So why would you have a $500,000 policy? Why? Like, really? That is a joke. $1 million bucks? All right, I'll give you a little bit of slack. Good for you. You got $1 million worth of coverage. Wait until you work with some surviving spouses 5 years later, 10 years later, and hear their stories. Hear how that $300,000 policy took care of them and the kids, right? It will change your perspective on this. So again, $5 million. That's the coverage you should have. That's the coverage you should have. 60% zero coverage. 30% maybe a $500,000 policy or lower. Oh, I'm insured through work. That is the biggest dipshit thing anyone could ever say. Oh, I'm insured through work. And so what if they cut you loose? Now you got no insurance. And how much are you insured for by work? 1 year's salary, 2 years' salary? Bugger all. It ain't gonna get anybody very far after the fact. It's just not. And fewer than 10% are in that $500,000 to $1 million insurance bracket, leaving 1% with $1 million or more. And you're in the 1%, so that better be you, right? Be better. At 46 years old, I bought a $3 million term policy because I got up and started talking about this stuff. I started calling people out. And I realized, yeah, I got like 2 million, I think at that time I had like $1.6 million, $1.8 million in coverage, which I thought was a lot of money because I was thinking in the present moment. That's a lot of money right now. That's not a lot of money over the next 25 years, you know, it's just not. So I leveled it up. $100 a month for a $3 million term policy. If you just made $100,000 more last year than you made 2 years before, you've got some leftover money, especially if you're incorporated. Sorry, I can't resist putting that dig in there. You definitely have an extra $100 a month that you're not gonna notice, right? It's like some of you saw my little clip I did on the $5 cookie. I bought a $5 cookie. I could just imagine my old man thinking, $5 for a cookie, it better have been this big. It was actually quite small. But I said, you know what? I'm gonna eat these $5 cookies every now and then because I'm pretty sure between now and death, my bank account balance is never gonna go down to its last $5. So I'm gonna be okay. I'm gonna have a $5 cookie. It's a little bit dumb, but you know, they taste pretty good, so I'm doing it. I would say the same to you. $100 a month, $1,200 a year. Are you really ever going to feel that tight for money again between now and death that it doesn't make sense to do this? No way. Imagine how good you will feel putting $100 a month into something, $1,200 a year into something that provides a huge stability cushion for those you're leaving behind. Think about that. This is like the best feel-good money there is. And man, I hope that the term expires and nobody gets the money. Hopefully, right? I mean, I'll re-up it again because I'll be 56, so I'll re-up it again one more time. And then as you get into the later term, hopefully you've accumulated some assets sufficient. And by then, hopefully you've seen kids through what they need to go through. Maybe you want to do something for the grandkids, whatever it is. But be better, right? Make that call. Hopefully, you have a quality insurance advisor in your orbit. Hopefully you do. If you don't and you're in BC, I can definitely help you. I've got a wonderful guy. Nice and smooth and simple. By the way, that policy took 6 weeks to underwrite. 6 weeks. I was on a lot of planes in that 6-week period, and every time I was taken off, I'm messaging him, Jay, where are we at with that policy? Where are we at? Do we take off? And okay, we're good. We're in the air. And then we'd land. I'm like, oh, okay. Touchdown, everything's good. Keep me posted. 6 weeks it took. So it takes some time to get in place. Make that call, make that happen. I know there's a few of you that are action takers out there and are going to do this, and that makes me feel great. Be better. Be better. Lead by example. Set a better example.